Would you like to build a portfolio of altcoins that could give you 10, 20, or maybe even 50 times your investment? In this video, we're going to figure out how to invest in cryptocurrency to make money, not to become a customer of payday loans. The first point I want to discuss with you, it's about understanding and having a realistic perspective on the market. Look, if we're talking about making 10, 20, or 50 times your investment, that inevitably comes with risks. And you need to understand that the higher the potential profit you can make, the higher your risks will be as well. If someone is trying to convince you otherwise, that person is either not thinking straight or is doing it on purpose. And you must understand that the more potential profit you can earn, the higher your risks will be. If someone is trying to convince you otherwise, that person is either not thinking straight or is doing it on purpose to deceive you. What's the catch here? To deceive you? If you're a naive pony, that's not the case. It's actually designed with the exact opposite goal. And for everyone to happily live as millionaires, well, my friends, that's not how it works. It's done with exactly the opposite goal. To make sure you bring your money here, earn somewhere else at a job in a business or somewhere else. They lost them here and moved on to their next spot to earn money again and bring it back into the market. This video will help you not to become a victim of this extremely unfair system. And indeed, to make money in this market, not lose it. But only if you pay close attention, like the video, subscribe to the channel, and leave me a comment as a thank you. Or something. The first and most important risk we have in crypto is, of course, the complete loss of your money, down to zero. And despite the fact that I am now talking about this quite easily, you need to take this very seriously. If you're getting into crypto, if you invest in Altcoins, you should be prepared for the fact that you can lose all your money to zero. I'm not joking. This is a risk you have to accept, and you shouldn't be entering this with money that has a significant impact on your life. I'm not going to overload you right now by saying that you need to invest in crypto carefully. And all that stuff, no, I just wanted to check your connection to reality a bit, to see if you're being reasonable and for you to be like that. Well, yeah, I accept that risk. I want a 10x return. And if it doesn't work out, then I'm ready to lose it all, down to zero, okay? If we've noted this moment, then let's move on and get to the criteria for selecting altcoins. So how do you pick projects that can really give you a 10x return? The first, and in my opinion, one of the most important points, if you really want to earn 10, 20x on your investments, is to avoid taking projects that have been around in the market for a long time. What is the essence of this? If you're taking projects that have already gone through the last bull run, that have already been pumped, and from which large funds have exited, investors that have a large number of retail investors in them, so-called hamsters, who were given these tokens at the highs, then you'll find yourself in a not so favorable position. Let's switch to the chart, and I'll show you how this will look. Let's figure it out using the example of the DOT project. What's the deal with DOT? This is really a cool fundamental project. This is a layer blockchain, layer 0, meaning it's a sort of overlay on top of other blockchains. And what do we see here? The fact that DOT started trading in 2019-2020, after which we had quite an active growth. Here we see we grew, then we grew again. And it seems like everything is wonderful. Well, there was a bull run, we were growing. Then there was a bear market and we were falling. But the point that many people overlook is that there are a lot of people here, here, and here who bought these tokens. Right here, and right here, there are a lot of people who bought these tokens. And as soon as the price reaches these levels, they will likely exit at break even. What does it mean to exit at break even? That means selling the tokens into the market and not letting it grow further. So potentially, if we're talking about whether DOT can update its highs from 2021 and 2022, but it's really unlikely because right here, here, and here, at all these levels, people who bought at the highs will be coming out. They rode the wave, and after that, they'll be hindering this wonderful project from growing right here until 2021. But it's really unlikely because here, here, and here, at all these levels, people will be coming out. No, God! And after that, we'll be hindering this wonderful project from growing. Will DOT survive as a project? Most likely, it will. This is one of the highest levels of developer activity. Will there be crazy X's here like 10, 20 times? Well, it's extremely unlikely. The second important takeaway, besides the fact that the project should be new, and its chart should start at least from the end. At the beginning of 2023, this project must definitely have large funds involved, at least from tier 2, preferably from tier 1. So these should be the most reliable funds. The most reliable ones, where there are teams of analysts, where insider information and so on are available. So what's the catch here? You can, of course, dig into a huge amount of documents by yourself. Go there, study everything, look at everything, just be that geeky nerd. But if a fund comes in, a big one that invests tens and hundreds of millions of dollars, but do you think they're using their heads? Do you think they're going to invest money in all sorts of crap? I seriously doubt that. It's clear that we conduct basic research on the project. And no one disputes that. But initially, there should be large funds involved in the projects. If there are no large funds involved, the chances of making significant profits decrease drastically. Keep this in mind. From this, we smoothly transition to the third takeaway. When our project starts getting listed on an exchange, funds shouldn't be sitting on 100, 200x returns. Well, okay, they will have a profit. They will have 5, 7, 10, or even 15, 20x's. For funds, this is not such a big amount of money. For a retail investor, yes, come in and invest $1,000, get $15,000. That's a good profit. It's more than just investing money. A big fund supports projects with marketing and development. I'm interested in exiting when a project has 200x or 300x returns, or at least 50x or 70x returns. That's a more interesting conversation. At low values, big funds are unlikely to exit because they think long-term and are ready to hold. And I'm interested in exiting when a project has 200 or 300x returns, or at least 50 or 70x returns. That's a much more interesting conversation, but at some low values, it's unlikely these guys will exit again, simply because they think long-term. They're ready to hold on for a while. It's unlikely these guys will exit again, simply because they think long-term. They're ready to hold on for a while. They're much more interested in putting in money, pumping up the project's price, and then accordingly exiting at the highs to retail. How to find these projects. We're also going to talk about how to find these funds, and we'll break it down together. Towards the end of this video, as I promised, everything will be here. So don't switch off, by the way, tell your friends. And let me mind you that if you're trading crypto, it's better to do it on the right and reliable exchanges. One of those exchanges is ByBit, our partner for the past 2 years. If you're trading crypto, click the link, create an account for yourself, and with our links, you can get bonuses of up to $30,000. In addition to that, ByBit has excellent liquidity and a user-friendly trading terminal. The link is below the video, so go ahead and create an account. The next, fourth takeaway. If we're talking about really serious profits like 20 or 30 times, that's obviously associated with risks. We discussed that it would be nice for us to look beyond the top 50 in CoinMarketCap. Yes, these will be riskier projects, but their growth potential will be much, much higher. Actually, as for examples, look, we won't delve into the fundamentals now, the project there and so on. We'll just burn with you now. I really want you to grasp this principle. We're currently looking at the CyberConnect project. By the way, I'm holding it in my spot portfolio. Look, it currently has a market cap of $78 million, and it's sitting at the 419th position. Now, from the perspective of market cap, let's imagine a hypothetical situation. This project could potentially do a 10x and reach 800 million, right? So that would mean $1 billion in market cap. From the point of view of capitalization, that is, let's imagine a hypothetical situation. Right now, this project could do a 10x and approach 800, which means yes, reaching $1 billion in market cap. Well, let's just open the coins now and accordingly see who we have here at 700 billion capitalization at 800. Market cap is 80-90. Bull run may alter it. Plus or minus, it will land around here. If we're talking about the current market, that is, if we don't have a bull run. But if there is a bull run, naturally the whole market will be growing as well. And it's clear that it probably won't even get close to the 100th position with this market cap. What are the chances? Then, CyberConnect can approach the 100th line of capitalization, considering that it has top funds, it has market, DWF, labs, and so on down the list. Pretty significant, even if we don't take into account any unreasonable bull run. The next example, the chart of the Arbitrum project, and I'll tell you that I also hold Arbitrum, and it's a good, interesting, and promising project. But the likelihood of it actually doing a 10x is lower. Why? Because Arbitrum already has a market cap, $2.3 billion. So, for Arbitrum to achieve a 10x, it needs to reach a project market cap of approximately $23.5 billion. Do you understand the difference? That is, in order for Cyber to make 10x, it needs to jump from 80 to 100 million, which sounds quite realistic. So, for Arbitrum to jump to a 10x, it needs to leap from 2.5 billion to 25 billion. I hope you caught that connection and understood it. Why? If a project has a high ranking on CoinMarketCap, it is seen as reliable. Potential gains are lower. On the other hand, the potential for significant gains there is likely to be lower. 500, top 1000 CoinMarketCap. No, absolutely not. We are reasonable people here who analyze how this works in a sensible way. If you want less risk, you go for more reliable projects with higher market capitalization that are less volatile. Want more profit. There will be more risks, but at the same time you take on projects with higher volatility, which have a greater chance of actually making it X. So, with that point, I think we've covered the fifth takeaway that we're discussing today, which is the project's tokenomics. And how will the fund separations happen? In fact, if you have done the first 4 points in good faith, there will most likely be no problems here. Our main task is to roughly estimate when the bulk of tokens will enter the market. And it's highly desirable for this to happen during a bull market, so that there isn't a large unlock at any one time and that the tokens are released evenly, 2024, 2025, 2026, where can I find this information? We'll also take a look at the CryptoRank service, and here we have the wasting tab. Actually, we can take a look at, for example, the Connect projects. We can look at how the tokens will be released into the market. You can see it in the thin line format, you can see it in the chart format, you can see who will have how many tokens and so on. If you chose a good project with solid funds and team listed by early 2023, they likely considered this. The key is who backs the project. Major funds backing it aren't foolish, they protect investors. At the end of 2022 and the beginning of 2023, they probably already thought about this aspect for you because once again, the most important thing is who is behind the project. If there are some major funds backing the project, well, they aren't fools. They won't do things that would harm the investors. They won't release tokens during a bear market for one simple reason. They would earn less. If there are some large funds behind the project from the very beginning, well, there are no fools there. They won't do it in such a way that investors will tokens appear during a bear market. They won't do that for one simple reason. They would earn less. So why is this necessary? Show a nice number. Yes, we have investors. Yes, they will stay in the project for a long time, making sure that the tokens are released during a bull market. Let's move on. The market cycle is the sixth takeaway, and probably the most important one overall. What you need to understand so that our young viewers can better grasp what a market cycle is and how it will affect their investments. Let's take a look at this wonderful picture. If you've ever experienced a bull market, then you know that when everything is rising, it's really easy for people to buy hope, faith that everything will grow. Euphoria, all these emotions, they are completely normal for any investor, for any trader, but it's better not to make decisions based on them. Otherwise, you might end up being that holder of Dogecoin. Remember, yes, we discussed the project together, that you buy for $30, $40, or $50, and in the end, you won't let this project grow. You'll be sitting in losses for a very, very long time. Naturally, your task is to come in somewhere around here. When there's fear in the market, when there's panic in the market, when there's depression in the market, when no one wants to deal with it, and so on. When did we have these periods? If we look at Bitcoin, well, more or less, again, if we talk about the previous cycle, then we have a period of accumulation. In 2019, 2020 then, surprisingly, the chart starts to rise. After that, naturally, we enter a bear market and a decline. We've had a year and a half. No, it's actually been 2 years of this bear market. Here we had, accordingly, accumulation, and now the chart, so for some reason it starts to rise again. What do you think? Is there any point in buying on such a chart? Well, I personally think there is, because we are somewhere close to a bull market, or maybe we're already in it. We just don't realize it yet. That's why I believe that, specifically from the perspective of market cycles, well, I'm recording this video, January 29th, 2024. Everything is great with us. Does this mean that the growth will be without any pullbacks, that will just keep rising straight up like this? No. It doesn't say that at all. We can still drop by another 30 or 40. 50% is absolutely normal for us. The most important thing is to understand where we are at this point. So it's important to understand that we experienced a bull market. Well, I mean, up to 2021, there was a bear market decline. There was consolidation. There was accumulation. And after that, we start to rise. It's logical that it's worth entering the market. After everything fell and accumulated, it started to rise. And now we have the 7th point on our list. It's less important, but keep it in mind. Look at how you gather information about the project. Of course, it would be good to look at its practical applicability, especially if there are some really interesting new technologies there. Looking at the team and the background of that team is the most important thing, meaning that there shouldn't be any, let's say, school kids sitting there with just 2 or 3 years of blockchain development experience. And they don't understand anything about life or business. They didn't have any good cases behind them. And the third point is how the tokens will be used. So, does it really have some interesting practical application, and is there any factor that will create demand for it? Again, I think my young cryptocurrency enthusiasts already understand that if there is demand for a project, then accordingly, its price will rise. If there's no demand, and there's only supply being dumped, let's say by funds that invested earlier, then it's clear what will happen to the token's price. Now let's get into the practical part, and I'll show you through examples how to find top funds and how to check listing dates. Where to look in terms of the capitalization of everything we've discussed. Now we are moving on to a service called CryptoRank. What are we interested in here? To see top funds, go to fundraising. We can see the top funds and the amount of investments. We can go to the fundraising tab and open the fund section. And accordingly, here we can see the top funds and the amount of their investments. Andreessen Horowitz, Polychain Pantera, and so on and so forth. So we can go to Andreessen Horowitz and see where these guys have invested. At what stage, how much money, and so on, but we won't be focusing on that right now. I just wanted to show you this. Here you can take a list of funds that interest you, the ones you want to keep an eye on. Next, you go to the Coins tab and enter the filter for the projects you want to search for. For example, you want to invest in projects that have, let's say, Andreessen Horowitz as one of the top funds, and let's also take Sequoia, for instance. These guys do pretty good research, and their projects usually have good returns and tend to last a long time in the market. We're choosing the listing date. Remember, yes, we talked about how we're not interested in projects that are too old. Let's take Well, at least from, let's say, October 2022 to, let's say, the current year until, let's say, January 29. All right, we've selected everything. Yes, so these are our main criteria for the search. We have investors on board, and accordingly, the listing date like this, we click apply, and voila, we get the projects that they have invested in, the specified funds. At the same time, we can immediately assess the potential of their returns. But we can literally take a look at the projects that fit our criteria with just a couple of clicks. It's clear that to have more projects here, you just need to include more funds. Or again, go to a specific fund and figure out exactly what he invested in. Well, let's take a look at the SU project as an example, and it's a good project that I've already talked about in my review on YouTube. At that time, its price was around 60 cents, and after that, SU gave us a 150% increase. Right now, SU is ranked 52nd by market capitalization. And right at the moment when it was priced at 60 cents, just so you understand, it was ranked 100th by market capitalization, right here. This is the moment I was talking about SUI and Aptos are similar blockchains. You've probably heard of cryptocurrencies about cars, but they are initially located at a higher capitalization and growing. Aptos is more complex, and SUI is more challenging to give returns compared to SUI. And we also need to understand this moment as investors. I generally have a good attitude towards both Aptos and SUI, and I hold both projects. But you just need to catch that initially, SUI. And there were more promising ideas despite the fact that this project had been sold off for quite a while before. Yes, so you can see that there's a fresh chart here, and there are no old holders. Well, during the bear market, we took a bit of a hit, but overall, nothing critical. And then we can specifically look in the fundraising tab to see which funds entered at what stage, what funding rounds there were, and so on. And sometimes we can even see how many times people multiplied their investments in SUI on different platforms. On platforms, millions made. Those with big funds, it's clear that people are sitting on crazy returns, but look at the amounts, literally several $million. Okay, the most interesting part is these guys, who came in with funds that were in the hundreds of millions of dollars. And it's clear that this information isn't disclosed publicly very often. How can you understand at what price the funds invested? You need to use various services. For example, you can use the drop tap service, go take a look. How many tokens did the funds buy and estimate how much they invested? So basically you divide one by the other. This way you get the price at which the funds entered this project. And once again, even if there are 10, 20 times returns, don't let that bother you too much. There are already 100 times returns in question, 10, 20, 30 times. Returns, well, that's actually quite a reasonable figure. Again, we can look at the SUI tab under wasting to see when the tokens will be unlocked into the market. But since SUI is, again, a good project, there are good funds here, and the tokens will be locked for quite a long time. You can look at this on the timeline, on the chart, watch it however it's convenient for you. So friends, I hope this video was helpful for you. If that's the case, don't forget to like this video. Share your comments regarding the search for promising projects. You might have some more life hacks. You can, again, share them in the comments. I think this will be useful and interesting for many. Using my tips can boost your crypto profits. Searching for altcoins for your investment portfolio. And I think that if you use my recommendations, your chances of making money on crypto will really be much higher. I'm saying goodbye to you for today, and I'll see you soon.